Boom! What's going on, Investomaniacs? Your boy, a Night Rider here. And today we've got CyberArk and VMware. Up first, we've got CyberArk. This is their website. Of course, their default picture, completely, like when I think about cybersecurity, I'm like, oh yeah, a dude climbing a mountain. And he's like, yeah, I made it to the top of the mountain. This represents cybersecurity perfectly. CyberArk is, I'm not sure if I like the picture, but I do like the company. CyberArk is a cloud-based security services company specializing in privileged access-related services. Migrating data onto the cloud makes computing more efficient and cuts costs in most situations, which is why so many companies are looking for ways to make this move. However, it also kind of makes it a little bit easier to get hacked. With the rise of cloud-based computing comes the need for more security. And that's been great news for cybersecurity companies like CyberArk. CyberArk helps companies protect themselves from cyber attacks and operates by detecting and responding to cyber attacks before their systems are compromised by hackers. CyberArk has worked hard to simplify the security infrastructure and make the system run more efficiently and smoothly for their customers with less intrusion. CyberArk is getting out in front of a new type of online security insurance service, offering clients a free evaluation of their security level compared to their competitors, and then following up with training programs for employees designed to help them be smarter with company data and to avoid hacks before they start. A small amount of user-based training can go a long way in helping avoid cyber attacks. If you would have bought CyberArk just 1 year ago, you would have caught a double. See, stock's at $129 right now. Look at this. Just 1 year ago, you're at about $64.19, more than a double. Can we just take a breath? Can we take a second and appreciate this? A double in 1 year. These are the reasons we invest in the stock market. Right? Now listen, you can always, there are many ways to invest your money. You can go in real estate, you can put it in Bitcoin, you can put it in gold, you can buy fine art and watches and collector cars, right? But we like the stock market. Why? Because it's so difficult to double your money in one single year in so many other types of investments. I'm not saying it's impossible, but it's certainly a lot harder than the stock market. You only need a few doubles, a few of these right here that CyberArk gave you in just this past year. You only need a handful of those before you start talking about permanently life-changing money. If you start out with $50,000, you only need to catch 5 doubles in your entire investing lifetime. And that's excluding no other appreciation anywhere else ever in your entire life. Just 5 of these, and you've turned $50,000 into $1.6 million, enough to retire on, if you don't think about inflation. That makes it less fun and less sensationalist, so, it's $1.6 million. CyberArk has seen a strong compounding top-line growth rate of 39% over the past 5 years, which is way above the industry average of 13% during the same time period. CyberArk has no debt on its books, $466 million in cash and cash equivalents. It is well positioned to continue to grow, and in a world where everybody increasingly needs online protection, CyberArk is there to protect you. And I think their value is likely to continue to rise. Up next, we've got VMware. VMware came onto the cloud computing scene more than, I feel like I'm saying that word wrong, but I don't think I am. Cloud computing scene, it just sounds weird. More than 10 years ago with vCloud, and since then it has been in the business of delivering cloud computing services and virtualization software to clients. VMware has consistently grown thanks to competent leadership that prioritizes both innovation and the needs of its employees, as they've seen some solid growth. VMware grew the top line 13% last year, which was accelerating from its 11% three-year average. VMware is a well-established, profitable company, so its top-line growth isn't crazy huge like some other cloud stocks, which aren't quite as established. But with a strong 22.6% margin and growing earnings per share of 35% annually over the past 3 years, it's still a company investors who want some growth should keep their eye on. VMware CEO Pat Gelsinger was recently voted the #1 CEO in America via a Glassdoor survey. So eat your heart out, Zuckerberg and Cook. I'm not really sure Zuckerberg was ever really close to the top of that. But Gelsinger managed to court partnerships with top tech giants like Microsoft and IBM. And while Dell maintains an 80% ownership and wanted to take over the remaining 20%, Gelsinger wanted to do right. I feel like I've said that name 3 different ways, 3 different times. That's, again, one of those names where I just read it, but I don't really I haven't heard it out loud. Gelsinger wanted to do right by his employees' equity in the company and hold out from selling over to Dell completely, which is probably why they showed him so much love in this year's survey. Now, some of you may be thinking, hey, Knight, I'm not trying to hold hands and sing Kumbaya. This is business. I want to know about the money. I don't care if he was voted favorite CEO on glassloser.com, but maybe you should care. A business's ability to make or not make money will often be influenced by how satisfied and willing to work their employees are. And remember all those millennials, wanting to make a difference in this world and stuff? They like working for employers they like working for. If you love your boss, you are more willing to work for your boss. Just look at Elon Musk. While a lot of top-level executives in the company have been, what's a nice way to say this, inconsistent, his engineers and programmers have been extremely loyal, because although he is known for being a tough employer, they also believe in his vision and mission. A happy workforce at VMware means a productive workforce, and the numbers thus far have backed that up. VMware's portfolio of products includes NSX Data Center, the Velo Cloud, and vSAN, and are going strong. At 35 times earnings and a 35% compounding 3-year earnings per share growth rate, the company has a PEG ratio of 1. I like VMware, and I say it's a buy. Full disclosure, I do own CyberArk. See that one right there? I've got about 26.7K in it. It is about 11% of my portfolio, and I do not have any short-term intention of selling it. Hey guys, I appreciate all the likes, comments, and subscribes. Hope you guys have a good one.